Thank you very much. It's probably quite telling. A graphite producer wedged between two lithium guys after the battery technical session, and it's about where graphite sits at the moment. That's actually quite powerful because at the end of the day, when you've got the world's best graphite, knowing it and being able to place it is really what the business is all about. A little bit about BlackRock. We're an Australian listed graphite developer for a project in Tanzania. The project is big. We're ranked number 2 in reserves at a bit over 70 million tonnes. We're ranked number 4 in resources at about 200 million tonnes. And that's fundamental if you're going to address anything in the EV space, because one thing we have learnt about EVs is you need scale to address the market. And I'll get to that in a little bit later on. Our management team, we've got the right people in the right jobs. Importantly, our chairman's with me this week. And Richard's well known to many in the finance circles here in London, and certainly that's why we're here today, is to get through the end of the studies and move the project into financing. So what makes Mahenge unique and why are we here today? Well, Mahenge is unique because we don't have an overprint mineralisation. Graphite is a metamorphic mineral, and which means it's been compressed and cooked over time, and in that cooking process, in many cases, you have mineralising fluids go through the ore body, and these things deposit things like vanadium, molybdenum, sometimes uranium, onto your graphite flakes. I don't care which way you describe it, but a deleterious element is a deleterious element. What we've got at Mahenge is an absence of an overprint mineralisation, and that gives us a very profound value proposition, and that value proposition is 98.5% TGC concentrate off a flotation plant. This is an industry where most people think 95% looks pretty good. Next thing we have is large flake distribution. Graphite's a little bit like iron ore. Lump is better than fines, and high-grade lump is better than low-grade lump. And what we have is a very large flake distribution, and that gives us access to multiple market points. While we talk about EVs, and EVs are a very, very important part of our future value proposition, the reality is when I start that mine up, I need to place product irrespective of where the EV market is at. Having a large flake distribution allows me to access multiple product markets, a fundamental de-risker to the project. We have a large deposit. What that means is if you're in the EV chain, we talk about a gigafactory. Well, you need a giga mine to put the graphite into the gigafactory. If you want 10 gigafactories, you cannot correlate different battery chemistry across your value chain. You need one mine that can supply all those. And you start very quickly narrowing down to 1 or 2 projects that have the capacity to scale up to fill up the value chain. And that's a really important part of Mahenge, and that's why the 200 million tonne resource is fundamental to us. Because we don't have an overprint mineralisation, it means I still deal with rock at the mine. The ore body actually sticks out of the ground. It gives me a very sandy tail, so we're dry filtering and we're dry stacking. We don't have a Vale wet tailings dam risk on our project. We've engineered that out. We engineered that out about 2 years ago. So we've been prepared to innovate and do things differently on the project. We're a little blessed in geography. We're 60 kilometres from a town called Ifakara. Ifakara's got access to National Grid, to 20 kilovolt power, and it also gives us access to the Tazara railway line, which is the Tanzanian-Zambian railway. That gives us trains that leave Ifakara straight down to the port of Dar es Salaam, where we put full containers on mostly empty cargo ships going back to Asia. So we've got a really, really good freight advantage. So if you pack and wrap Mahenge, what we find is we've got great costs because the ore body sticks out of the ground. We've got access to grid power and the best freight solution in the business. And we've got a great product because of the geology. The final bow on the ribbon on that is the workforce. Tanzania is actually quite a literate country, quite well educated, and that bodes very well for being able to bring a prospective workforce up the learning curve. And we've got a workforce that's proximal to the mine, not on top of the mine, which is good, but proximal to the mine, which means we don't need to build an extensive camp or bring people in from other areas. So again, it's all part of the low capital cost solution. So let's talk a little bit about graphite. There's been talk about growing demand on the back of EVs, and that's happening. But I think what really matters here is things like clean production, 98.5% TGC versus 94, 95, which is typical of the Chinese grade. Means if you're using an acid route, you're going to use 1/3 of your acid. If you're going to go all the way to high-spec battery feed, you're using thermal, you need to be above 98.5% feed. What that means is we can place our product in an uncontested market space. There's nobody out there who's got this product. There's nobody out there who can compete against us. So we can go in and we don't have the market contesting space that a few other people have had. Importantly is that we have multiple markets. We talk about EVs, but really the one that drives most of our margin is the large expanded flake. And that goes into applications such as brake pads, insulation, power stations, and a plethora of other products. So a little bit about where we are with the project. We've had to do a few things the first time in the project. We've completed our DFS. Important part of completing the DFS is running a pilot plant in Canada. We ran 90 tonnes through an SGS plant in Canada simply because we had to get the circuit right, and we had to have a brand on that circuit that would let it be bankable. So SGS Canada allows us to bank that project into a Western financial market. We had a little bit of a problem with that in that when we took 98, and in this case 99% concentrate into the offtake markets, we got a lot of head nodding, but most people didn't believe we could do it, and they thought there was some sort of strange chemistry going on. We ended up running a second pilot plant in China, and that pilot plant we opened up, and that is we invited customers to come in and have a look at it and sample it themselves. Now, on the back of that sampling exercise, two things happened. Firstly, we had a lot of people step up and say, it's real, we'll sign up for offtake. So we sold out, and we sold out not 85,000 tonnes, we sold out 250,000 tonnes. Clear evidence the product's in demand. The second thing is our EPC vendor who ran the plant for us stepped up and said, okay, we are now going to stand up and we will do a $40 million vendor bid for the plant that's conditional on a performance warranty. Again, a very strong sign of confidence in what we can do with this material. I think to me the best thing in that plant in China was the guys hit their numbers in 2 days. 2 days running a pilot plant, we're at 98.5% head grade, concentrate grade, 93% recovery in 2 days. I think it's a pretty remarkable achievement and attests to the uniqueness of the geology that we've got here. So we've had to do a few things first time. We're the first people to run a very large pilot plant. We're the first people to secure an EPC vendor bid for your final plant. We're the first people to introduce a staged development model. We're the first people to encounter and use dry stacking as a way of getting around a wet tailings dam problem in a tropical climate. So the message being here is, if you're going to succeed in this space, innovation is where you need to be, and that sort of drives the ethos of us as a company. As I said, we've produced a DFS. The DFS came out for around $900 million US dollar NPV on 115 million CapEx. We're working on enhancing that DFS, and I can tell you the number gets bigger if you add a fourth module and if you compress the development sequence. But what we really found out as we started to get into the enhanced stage is it's a dialogue with the financial community. And how can you go in there and de-risk your financing process? And things like having a vendor bid around your mill gives people confidence the mill's going to work. To have Tanzanian participation in your financing structure gives you an idea that you're actually on top of your political risk management. So we've really taken that out and done something unique. I think the really important part for me is this confidence we have around a pricing framework. Because we've run the second pilot plant, because we've got 250,000 tonnes of committed offtake, we are confident that we can place the product and we can secure that price point. So let's talk a little bit about the financing strategy for Mahenge, because it is a blended strategy. If you think about the advantages, we've talked about the geological advantages. That gives us grade, gives us flake distribution, which gives us our selling price. If you think about our geographical advantages, it gives us low freight, low power costs, and that gives us our cost advantages. So we've managed to combine high margins with low costs. Put that into perspective, at about $400 a tonne cash cost, I'm bringing in $3 of sales revenue for every dollar of cost. What have we done? We've completed the metallurgical test work, doubled down on it, did it twice. We've done a DFS that we know is bankable, and it was started off being bankable on day one. And we've got an offtake pricing framework. Against that, the sort of structure we're looking at, parallel structures, looking at bonds, debt, vendor, our customers, can we sell down, and obviously strategic investment. And that at the moment is a process we're working through. What I can say at the moment is we're quite happy with the level of interest that we're getting and the level of engagement we're getting. Tanzania, it's got all the headlines for all the wrong reasons. Look, the bottom line on that, let's call a spade a spade. The conversation around Acacia and Tanzania is a conversation around Acacia and Tanzania. The biggest mine in the Anglo Gold Group is actually Gator, and that's in Tanzania. Confidence is returning to the sector. We've seen Nedbank step in and go conditions precedent on a funding deal with Strandline. We've resolved the export of mineral concentrates issue. We have a mining licence that was granted to us in 3 months, and we have an environmental licence that was granted to us on time. So it is coming together, and the more pressure we can put on the government, the faster we move, and obviously financing is a great way of putting pressure on the government because it links into jobs. So why should you rush out instead of giving £2 to the guy in the street saying feed the orphans in Tanzania, buy BlackRock shares? Why? Because we've got geology on our side. We've got the highest grade concentrate you can get. We've got a favourable flake distribution that gives us access to multiple market segments. We're not waiting for the EV revolution. The EV revolution is effectively an option for us. Or you could play it backwards, we're an option on the EV revolution. We've got geography that gives us a unique cost position. We got gifted a power line, we've got gifted a railway. That often doesn't happen. We've been very, very conservative in our risk management. 2 pilot plants, a DFS heavy, and we've managed to go off and get a pricing framework for our customers. Nobody else has been able to do that. And then if you look at the economics, $115 million investment gives you around a $900 million NPV and a margin most people can't even believe. So, summary, where are we at? Significant growth opportunities in the EV market, but effectively we are an option on the EV market in that we can put our product into other markets if and when we're ready. But the important thing is we have scale, and you can't tackle the EV market if you don't have scale, because you need to be able to address the growth ambitions of battery manufacturers. We've demonstrated there is enormous demand for our product, a high-spec product, and importantly that product goes into an uncontested space and it really differentiates itself as being clean graphite. We're pretty well positioned. Our execution strategy being modular, I think de-risks the ramp-up process and de-risks the growth, and we have some exceptional economics. $900 million MPV, 42.8% IRR and a margin of about 64%. And I can tell you that gets better when you do the enhanced DFS. The other thing we have is operational discipline, so I'm at my time now and delivered in full on time. Thank you.